So Patrick just asked if I could read a little bit from the book. I'll read you just the beginning of this chapter called Ethical Calculation. So this is chapter 3, and comes from, I met this guy who I'm calling Alex, and Alex is a reservoir engineer, but he also does the sort of financial economics. So basically, for the students in 5112, he basically does the technical economics behind oil and gas, and they use some programs behind this. And so I'm describing how this is happening when I meet him in his office. And it's really important because, as Alex says at the beginning of the chapter, the quote says, "There can't be reserves unless there's economics." So this is the idea that oil and gas doesn't really exist unless we can put a financial value behind it. So I'll read you the first paragraph, maybe two. Alex trained as a reservoir engineer and worked for several well-known oil and gas companies with exploration and production activities in the United States and around the world. Now he is the vice president of a medium-sized oil and gas exploration and production firm, and his role straddles the divide between financial expert and in-house reservoir engineer. There's a large poster with interlocking squares and rectangles superimposed on the Gulf of Mexico on a wall in Alex's office, showing the areas divided up for oil and gas production leases. On the whiteboard beside me, there's a hand-drawn picture of an oil well with numbers scribbled beside it in dry erase marker. And there's a letter-sized piece of paper with a colorful seismic graph plotting geological layers of drilling prospect typed to the wall. These artifacts reveal the engineering side of his work, estimating the location, size, and quality of hydrocarbon reserves. Alex tells me he does the economics for his firm. I ask, when you say you're doing economics, what do you mean specifically? It's the reason I'm here, he says. I do the economics for the exploration. I also do the economics for the acquisition. Whether a company is looking to drill a new well or buy a new land prospect, the most important thing that he's learned, he tells me, is people really want to make sure that they're going to get their money back. And if you can't show them that you're not going to get anybody to do anything. He learned how to do economic analysis when he worked at Anna Oil. This is, of course, all pseudonyms for other companies. He explains what I learned with them is that economics is everything. You have to have reserves to boot the economics, and that's what guys like me do. We do the reserves too, but then we run the economics. It's critical. We got investors coming to look at these blocks of lands to drill. They want to see how much money they can make. By economics, he means the financial metrics and models that see the future and inform decisions about hydrocarbon projects should be materialized based on what is profitable. Investors are not interested in the material aspects of extraction. That's Alex's job. Instead, they want to know what it financially means for them. If a company cannot make a 20% rate of return for investors, he says, you don't do it. That way we cull off a bunch of stuff, separate off all the junk. He shows me how he puts all this information about various oil and gas wells into a program on his computer and runs a probabilistic distribution of the development of each. I run all the probabilities, all the outcomes, all the way through to the dollars per share impact for investors, he says. The data he includes in his calculations are price decks, expected oil well decline rates, and discount rates. Discounted cash flow and metrics like IRR and present value 10 are key to Alex's analysis. We're big into discounted cash flow. We'll look at what investors are going to get back in time at a discounted rate. We do a full suite of economics. It's very rigorous. Nothing gets done without the numbers. Yeah, so this, the book kind of came together. I think most books do somewhat, I guess you could say, organically. So I started, it was actually during my PhD research that when I was looking at financial speculation on commodity markets and how traders in Chicago and New York were making food prices go up and down around the world, across the Middle East and North Africa, that it was when I was talking with folks who were involved with that speculative activity that I also found out they were speculating on energy as well, on commodity futures markets. And so that was the beginning of sort of looking at energy. And it was actually, it's what brought me to St. Andrews, because there was an ERC project that was led by the High, and I applied to be a postdoc for this project. And when thinking about the project I would like to do, I thought, how neat would it be to go and do research with the people who are financing oil exploration? And then thinking about where in the world might this happen. Thought about maybe London, because there's obviously a financial market in London, very big, of course, that does oil. You do Canada. Canada has an active oil market, but the US seemed to be the most interesting because of just how much activity was happening in the US. We had the US shale revolution, so this is unconventional extraction or fracking that was happening, which changed the US's energy landscape, which made it the largest producer of oil and gas in the world. And so I thought well, I want to find out more about this. Like, how did this happen? And in particular, what was the role of finance in all of this? So that's kind of how it kind of came about. And so I went into it with an idea that I don't know what I had an idea of actually, but I thought I'd do some sort of ethnography or some sort of research. And then as I got into it, it was somewhat exploratory, and I really started to explore and try to understand the worlds that the people that this ethnography is with, what that looked like. And it was after that, I think it was like probably 14 months of research altogether, that I sat down and I started to look at all the data I had and realized I could start to see the themes emerge. So I think that's how it came about.
Cool, thank you. So this isn't your field site isn't a typical field site. How did you navigate access and fieldwork in what's a fairly contested and logistically difficult space?
Yeah, thanks. I think this is a question that I get a fair bit about. How did you go about doing this research in an industry and with a group of people that are relatively hard to access? It was a couple of things. In the first instance, I reached out to all my contacts at the beginning of the research, and I said, is there anybody that could put me in touch with other people in Houston in this area that I could talk with? And that mostly came up with dead ends. Mostly because my friends that were either in the financial industry or in academia were like, nobody wants to talk with you, which was a bad start. So then I started to talk to colleagues, and it was actually Meta, who's at the back, who's the reason I came to St. Andrews and to do this project, put me in touch with a few people and said, maybe you want to talk with them. And I think that started the ball rolling. And it was through those initial contacts, that I sort of made more contacts, and then more and more. And it kind of happened, again, in a way that was exploratory, not quite expected. I think it's the way I start the first chapter is I ended up meeting this interlocutor who I met through somebody else. And it was at this really fancy bar in downtown Houston. And it was full of gold and black. It felt like I was in some ways, time warped back to almost a 1950s kind of era, which was the vibe that the bar had. And I met this guy, and he has a striking resemblance to Don Draper from Mad Men. and it was he was one of the first people I ended up talking with. And he said, there's this conference that's happening in a couple of days, and you should really go to this. And so I got in touch with the conference organizers, and it was a private equity capital conference in very expensive to get into. So I pleaded to basically have them let me in for some sort of discounted price. It was there that I made most of the contacts, most of the interlocutors that this research is based on. And one person in particular, who is at the center of this industry, who comes from an oil family, after a few months, basically opened up his Rolodex to me, which was incredible. It was only, I think most ethnographies happen by a measure of, at least a good measure of chance, that this ended up happening, and then getting access to and getting to hang out with people both at their workplace, at their homes, at church, and that's really how this ethnography unfolded. So I think how did it happen? I think I was really lucky. I think is part of it. Yeah.
So now we've finished the easy questions, I'm afraid.
Yeah.
No. So one of the key narratives I took from the book is the idea of what we might call a cowboy ethic, of sort of rugged individualism and the value of being on the frontier. Do you think this is particularly tied to your sort of United States context of the interlocutors and the ideas of sort of American exceptionalism and manifest destiny? So is this cowboy ethic peculiar to American oil men?
That's a lot packed into that question, Paul.
Told you.
I think so. I'm not sure if it's an American thing so much as at least a Texas thing with the interlocutors with whom I ended up doing this ethnography. Because I don't want to generalize this ethnography to say this is indicative of a larger culture in the United States, if culture and anthropology speak. And but I think it was something that was omnipresent in this research. And it's not something that I really quite understood until I was looking at all this ethnographic data, and there was something that kept coming up. This like constant references to cowboys, constant references to like frontier, constant reference to like a what I describe in the second chapter is this historical romantic imaginary of the way people imagine themselves in the present as related to the past. And it was when I started to really interrogate, like, where is this coming from, that I realized that people were drawing on the past, especially in this community, which was based in Houston, Texas, were drawing on this narrative to situate themselves in the present. And how did they do this? So, for example, it would often be couched in narratives such as, we've done this, or again, paraphrasing what some of the interlocutors said, and I go into depth, we've done this for a long time. We've always been on the frontier. We've always been crafting this like world, and we're going to continue to do this. And it was interesting because as I started to piece this together, you could start to see the historical link between the present day oil industry in Houston, Texas, how that was related to the cattle industry, on which many I sort of draw links to cotton, and then also to previous to that the slave economy in Houston. And you can see there's a couple of historical characters, real people, who tie that history together, which I explore in the book. And so all of a sudden, I started to understand how it was that this idea of the frontier, which was tied to ideas of settler colonialism, was then tied to the present-day oil industry in a way that was actually made very, very explicit by the people I talked with. Which I thought was really interesting. So that led to an idea of like, where does this idea come from? How has it changed? How has it been constructed over time? And then how that's merged with present day notions of the oil man, quote unquote, and how the cowboy merged with ideas of the oil man and the entrepreneur, to the way that people currently frame themselves in their individual identities.
So another key theme I took from your discussion is the sort of the intersection of risk and uncertainty and imaginary futures. And could you say a little bit more about that? In particular, the way imagining future risks is different from imagining uncertainty.
Asking all hard questions about like big concepts like risk and uncertainty. Yes, I think, going into this research, I was really drawing on my background in economics and in business and in economic geography. And the other thing that kept coming up in the ethnography was this idea of risk and risk-taking and de-risking. And I thought, what is this? And there's analytical, you think about and take the way that people are using these ideas and concepts, and then try to think about where did these things come from, and then also think about them analytically. How do we distinguish these from things like such as uncertainty? In the book, I think one of the things I do is interrogating this concept and where it came from. We know there's a difference between risk and uncertainty, which I explore to a certain degree. In the sort of academic literature, the idea of risk is that we can measure this, we can put like a number on it, we can put like a probability, whereas uncertainty is something that we know is perhaps present, but we can't put a number or a probability on it. And I think this idea of engagement with risk was one that was tied with ideas of the cowboy and the frontier in many ways. I think thinking about that in its historical context and the way it was tied to identity, it was then interesting to see how the idea of risk and uncertainty was tied to notions of climate change, and how people engaged with the idea of risk-taking in the oil and gas industry, and then on the other hand, the idea of risk-taking with the climate. To some degree, they were, I would say, held somewhat separately or apart by many of the interlocutors that I engaged with. Risk in a sort of financial sense is very much based on how much money are we going to make, how much, can we do a projection on this. People that are in my class know that we do this sort of thing. We think about how much money would a particular project make. We can do a projection on that, and we can incorporate a certain degree of risk with some sensitivity analysis when we change our underlying variables. When it comes to climate change, the engagement with risk then came back to, again, this historical imaginary, and also to some degree issues of cosmology. So thinking about and asking interlocutors about, what do you think about climate change? What do you think about climate risk? And they brought up certain different, again, not everybody is giving the same answer, but there's a couple of themes that emerged. In the first instance, I heard, and some of the themes I engaged with was that the climate is a risk, but we're risk takers and we're willing to take on that sort of risk and looking toward the future. And this was tied to ideas of material moral provisioning that oil and gas provide the riches around us, they provide like the synthetics for carbon, all this other stuff. And so it gave a justification for that sort of risk-taking activity. In another sense, some interlocutors drew on faith and cosmology. And this is something I bring out explicitly on the chapter on climate change, that some expressed sentiments that like God was looking out for them, or God was working through them, because what they were doing was, they were being good Christians, they were doing good work in oil and gas finance. And so in that way that they felt that they were, I guess, in some ways hedged against that risk. So I think it's a theme throughout the book, and it's one of the main themes, and I think I approach it in a couple of different ways. One, in terms of how we think about it in scholarly sense, how interlocutors engage with it financially, and how they engage with it in a more broader sort of worldly sense.
So I kind of want to turn to the sort of the frontier narrative a bit, and this question is a bit less well-formed because it's only just occurred to me.
Yeah.
So there's something about the idea of sort of the frontier that the oilmen are working on the frontier, but do the sort of the private equity firms see themselves working in a sort of a financial frontier, a financial sort of liminal space between sort of standard banks and firms, say?
Yes, they do. There's a couple of things that come together with the frontier. So in the book, I trace the idea of the frontier as originating from a French word, but then how it's used in both American literature, but also sort of a broader sense of sort of like being individualist on that sort of carving out society, making society in ways that were tied with the cowboy sort of image that was really sort of prominent in Texas. Private equity definitely fit into that. I think that was when I was looking at the larger, this research looked at financiers primarily. In the larger spectrum of finance, we have bankers, which do loans and stuff. We have mezzanine finance, which is sort of like they do all sorts of mixed things between equity and finance. We don't have to know the details of this. But on that spectrum, we find private equity financiers. And the private equity financiers are kind of a very niche group. And oil and gas private equity is even more niche. And one of the things that they take pride in, individual pride, is that private equity means taking financial risk to them. The way that they're talking about it, they're risking investors' money. They're doing something that banks won't lend to. They're sort of on the higher end of the risk return spectrum. And in many ways, the shale revolution, or the unconventional extraction, fracking and such, in many ways, it kind of was, for many of the interlocutors, a new frontier. It's not that these reserves weren't already known. They were mostly conventional reserves, so they're oil and gas fields that have been mostly expected. But with this new unconventional technology, they could get more out of the ground, essentially. And so they were on sort of a new geological frontier, or at least financing it in this case, and very much tied themselves to that identity. So in many ways, the financiers I ended up doing this ethnography with very closely tied their own identities to the identities of the people that they were financing. So in this case would be the oil producers, and this was then tied into this larger sort of narrative of cowboy and risk-taking and frontier. If that makes sense. Yeah.
So moving on to sort of the way you talk about value, or rather the way you're talk about value. You seem to tightly tie moral value and financial value together. Do you think there's any tension between this and what I called in my first real question, the cowboy ethic, where being on the frontier of the civilized world is in itself valuable?
Yeah, sorry, that's again a very complicated question. So can you repeat that question?
Yeah, sure. So your discussion of value seems to tie financial value and moral value pretty tightly together. Do you see any tension between that and the sort of the frontier ethic, the cowboy ethic, where being on the frontier is itself valuable?
Yes. Yeah, let me take that in two parts. And actually, I remember it was something that I wrote early on in writing this book. It was an article that I think ended up being a chapter in this book. And one of the interlocutors that I deal with said, money is a way of valuing how good you are, which I thought was really powerful. And actually, I shared that quote with Meta, and Meta was like, thought that was. I think she shared it with other colleagues, and we're like, "Is this right?" And colleagues were like, "Yes, that's right." And I thought there was an interesting. It was an interesting way of thinking about larger values in terms of what is important or what is like valuable to us, and the way of financially measuring that. And in many ways, the interlocutors who I ended up doing this ethnography with tied those two things together very closely. In some ways, like the way that the industry is structured, the financial industry is structured, is a money-focused industry. Like it's an industry focused on making money. And so I guess it's hardly a surprise that success is measured in terms of the larger worldly values about what's important, how much money you have. I guess is maybe not surprising in that sense. It was, I think, also interesting to think about it in a slightly larger sense, because when I asked people in Houston in this industry, what did they sort of value? Like what was important to them in life? And many people said, family, religion, and the community, and all this sort of other stuff. But again, it then ended up coming back to how much money they made in private equity or how much money they made in banking, and that was a way of facilitating their goodness. So, for example, one interlocutor who I got to know relatively well was talking, for example, about how the money he made in private equity, which was substantial, like we're not talking about small sums of money, we're talking about large amounts of money, was a way for him to do good in his community. So he could use his financial value to exercise his larger values. And I interrogate this a little bit in the book, and sort of bring from his perspective, like how does he see this working? And he said, when I make money in private equity, I can then spend money in the church, and I can do things for my family. I can send my son to an elite college. And so it was the sort of financial value was very much tied to his other sort of worldly values. And again, I think it's in the book, I try to separate some of these themes in terms of value and values, risk, responsibility, and time. But in fact, what ends up happening and what in the conversations is all these things were all tied together very closely in a way that I've engaged with some academics in anthropology and other disciplines when they read this book, and some people were like, "Yes, this is exactly what I'm seeing, or this is exactly what I'm hearing," and other people were like, "I wanted to throw the book against the wall, not because I hate the book, but they really disagreed with what some of the interlocutors were saying," which I think was kind of what I was hoping for, because I was hoping that people would read it and that they would either I hope that they would enjoy the book, but I hope that it would elicit different reactions in terms of people would read it and say, yes, that's exactly what I see, or this is exactly how I see it. And other people would read it like, okay, well, that's really frustrating to put it politely, but yeah.
So that brings me on to a question about your interlocutors. So what do you think they would say after reading the book?
Good question. So I've shared it with a bunch of them, and a bunch of them are reading it. And I think that I've actually heard from a few people, and they said some of them said, I now understand what you're doing here the whole time. And they said, they're like, I see myself in this book, which is what I was hoping. It's kind of I found it's a hard, but I think an important line to walk, to try and put forward a world that perhaps, at least I was not a part of, perhaps we're not a part of, put forward a world that the way that they see it, and then also take a step back and analytically take that world apart and see how they, how that world's constructed and such. And so some of them say, yes, I can see myself in this book. others have said, I'm going to read it, and I've sort of with bated breath, I think they read the back of the cover and such, and were like, I'll let you know what I think later. So we'll see what happens. But like I said, I hope that what I've hoped to have done here is that they can see themselves in the book. Other people read it, and I think will hopefully take a bunch of insights from the book. And I hope that even if I don't agree with their particular worldview, I think it's a really interesting one to kind of interrogate and to put forward, because I think as Dominic Boyer, who I was talking with, and Simony Howe, I was talking about with several weeks ago, I said, understanding this sort of view is really important, because if you want to understand how this industry works, if you want to understand what drives people that do this sort of finance, you really have to talk to them and get it to understand their worldview. Without doing that, then we don't know, and we're maybe prone to stereotypes and other things. Perhaps the world's a bit more complicated than that. So, and that's what I hope to do.
So, as someone who is neither an anthropologist nor in finance, I really enjoyed the book. I found it really. You
read the book? No, I guess.
really easy to engage with. So, but is there anything that you would like to have included in the book that you couldn't include for whatever reason that you're happy to share now?
I don't know how other people feel in the room, but I think every time after I write something, I'm like, I was thinking about the ways I could have done differently, and then I go back and read it and think, why did I write it like that? And so I think there's a lot of those moments, and I think there's a lot more that I could have brought out in the book, but I think there's always a choice between what you put in the book, what can you leave for later, and I don't think that the content of the book is kind of like where it ends. But yeah, would I do differently? Probably do a little bit differently. Would I change it radically? Probably not. But yeah, I think that's probably the honest answer.